Hey, everybody. It is Chuck Barone on Wednesday, August the 14th, 2024. It's CPI day, a big day for the market today. Getting a number the market liked. So now we're moving forward. The market's rallied nicely, of course, moving forward with probable rate cuts in September. We still got quite a ways to go before the end of September. So we'll see how things play out between now and then. But right now, the market's betting 100% chance Fed cuts rates in September. Now the only question isn't so much will they cut rates, which has been the big question for how long. Now the question is how much. Will they cut by a half in September? Which I think if they're going to cut, why not? What will the total amount of cuts will be? What will they cut this year? So there's a lot of questions now. The whole conversation kind of changing from when will the Fed cut rates? Are they going to cut rates? What's happening to how much will they cut rates and how quickly? So fascinating stuff, guys. Anyway, before I get rolling, let me take a half a second. As always, welcome everybody to the show. As always, thank you guys so much for your support. Thanks to the guys on the chat today. It looks kind of quiet. We got no Attila. We got no Wolf. We got no Big Salty. So if you guys missed me, we do got Smoke and Paradiddle, Mr. T, and a few others on here. So you guys keep the chatter going. Much appreciated. And let's talk about markets today. So we have, as we know, we got the CPI number today. The number was not negative. The number was not zero. But it was a number the market could live with, actually right in line with what they predicted. So the markets rallied up like crazy. So you have the Dow up 242 points, back up over 40,008 points on the Dow Jones. The NASDAQ up just 5 points today, 17,192 on the NASDAQ, and the S&P 500 up 20 points, 5,455 for the S&P 500. So across the board rally, a little bit of weakness in the NASDAQ. That's like that with those tech issues, though. Sometimes, one company has a bad day, it can tank the whole index. Probably what happened there today. Bond market. Well, the bond market had kind of a weird mixed day today, right? So the 10-year, people buying the 10-year, the yield falls 3 basis points. The 10-year now at 3.82%. At the same time, the 2-year, which I would think yields would be falling because that's right in the kill zone where the Fed's going to be cutting rates. Nope, the 2-year up 2 basis points, now at 3.96%. So the yield, the inversion widening out again, not by very much, obviously. When you're talking 14 basis points, that was the low of the inversion for 2 years. Now that's the high lately. We're going to get this yield curve back to normal again pretty soon, I think. The dollar today, very quiet day for the dollar, up just 2 basis points on the index, 102.60. So the dollar getting a little bit beat up with these rate cuts coming. Of course, rate cuts weakening the dollar. We've had, these higher rates for longer now. That's helped the dollar be strong, right? We've had 104, 105, 106 on the dollar index. Now coming back down to normal. And once the Fed actually starts cutting, the dollar will come down even more. Precious metals today, gold and silver, not a good day for metals. Gold falls $17.40, now at $2,447.80 for an ounce of gold. Silver falls 27 cents, $27.52 for an ounce of silver. So I got to tell you guys, silver is really looking like a bargain to me. I don't know when it's going to break out, what the deal is, because everything I'm reading points to higher silver. For some reason, the market, it's not materializing in the market, which is really a shame because from what I've been reading, like I said, the demand for silver is as high as it's ever been. The supply is not. We're talking about in all the silver produced being used for industrial purposes now, with none being available for investment. What does that tell you is going to happen to the price of silver, man? So this is kind of a weird thing, but I'm telling you, silver, if you have a couple extra bucks, buying a few extra ounces of silver, probably not a bad idea here. Oil falls today down $1.23 per barrel, $77.12 for a barrel of West Texas Intermediate. Now we got to see, again, it's all about the Israelis and the Iranians. If they can, Iranians are going to have their payback. If they do, and it's not a real destructive thing, not something that's going to lead to a wider war, not going to get Israel involved in bombing the shit out of them or anything like that, not going to get our military involved, I think oil will settle back down. But of course, there's always the chance that the Iranians could go a little too far with their retaliation move, and you could end up with a broader war and a big hassle. Hopefully that does not happen. Bitcoin today falls $1,627, back down under 60, $59,069 for Bitcoin. Bitcoin needs to get above 60 and stay there, guys. Having some difficulty with that new resistance number now. That was something they hopped over very quickly last time it was near these levels. So we'll see. But Bitcoin's at a point right now. You're going to see it's either going to bust loose or it's going to retreat for a bit. We'll see which way it goes. All right, let's talk about data. We got CPI, shows inflation still coming down. Top line comes in 2.9% year over year. So it's under 3%. That is down from 3% last month. And it's the first reading in the twos on CPI since March of 2021. So yeah, that's quite an accomplishment. It's been a 3-year cycle, guys, longer than 3 years. Now we're back up under 3. Month-to-month average, month-to-month numbers coming in at 0.2%, which is exactly what they were expecting. That's after the top line number actually declined last month. Core comes in at 3.2%, which is exactly what they believed it would be. Also 0.2% month over month. Now here's the interesting thing. The way CPI is calculated, real estate prices, housing prices, real estates and rent are the way they put them in there, they're a very, very lagging indicator, okay? And what's happened is almost all of the inflation this month was due to the cost of rent and real estate catching up with CPI. They said it could take CPI, if nothing changes in real estate rents, they stay right where they are for an entire year. It could take that whole year for the lag to bring CPI current to where real estate prices are. Very interesting. I don't know why the methodology would be like that. I would assume there's something that they could do to correct that pretty easily, but there you have it. So if that was not a lagger, we would have had higher numbers leading up to this month, right? But probably would have had a flat number this month or even a negative number like we had last month on the top line. Interesting. So these are not perfect numbers. They're still way above their target as far as inflation numbers go. And this last 1%, they're going to try and get from 3 to 2. That's going to be harder for them to do than to go from 9 to 5 and from 5 to 3. That last one is always the super hard one. We'll see what kind of patience the Fed has for this. I was reading an article that said the Fed should just declare victory and go home. Are you freaking kidding me? First of all, what did George Bush teach us about declaring mission accomplished too soon, right? Let's not do that here, guys. We know the numbers are still high. We know inflation still needs to come down. We know a couple of factors that we can immediately move to. And you're already seeing it in the corporate world. They had their way with us for 3 years, raising prices any way they wanted to, greedflation, which, I know you guys don't believe in that as much as I do, okay? But this greedflation, corporations the margins were so tight, they hadn't really had a chance to raise prices very much. They saw the opening and they took it, man. Profit margins for corporations at record highs, and we already know all of this, okay? But now the backlash is coming. Now consumers slamming the door on that crap. You see these fast food companies, McDonald's, Wendy's, everybody now coming out with these $5 deals, everybody, because what happened is they raised their prices so high. Remember the story about the $14 Big Mac? Remember that one? So they raise their prices so high, consumers just stop going. Or they figure if I'm going to spend $15 on a sandwich, I can go to a better place, have a sit-down meal, have a waiter bring me the food, pay the same as if I'm going to McDonald's or Wendy's. So now these burger joints, the fast food places, all getting their act together, bringing prices down on everything. You're going to start seeing that all over the place. You saw Home Depot. I've talked about it on the show yesterday. They came out and basically saying, hey, people are deferring big projects. Well, yeah, because you're charging too much for them. So you're going to start to see prices once this is all done. And as we move closer to the question mark of soft landing or recession, right? Because we've still got to figure that one out. You're going to continue to see a lot of stuff, not everything. Prices starting to come down. Everything's getting, how competitive everything is already. And going to be interesting to see how it all rolls out. But CPI comes in today, gives the market good news, paves the way, along with the PPI numbers we got yesterday, paves the way for the Fed to start cutting rates. Now, the Fed's going to have a little bit of an interesting thing here because I was reading an interesting article today where they were talking about, Ed Yardeni, a respected analyst, he said we're only going to get one cut this year, probably in September. He figures a 1/4 point cut. He said the economy is too strong for the Fed to cut rates further than that. And he may have a point there. Typically, the Federal Reserve doesn't just cut rates because people want them to. They don't just cut rates because people want cheaper mortgages. They don't do that. Typically, they're only cutting rates for economic reasons. The economy is slowing down. People are getting laid off. Jobs are slowing down. They need to spruce up economic activity. They do that by cutting rates. So Yardeni says, no, the economy is still too strong. We saw GDP numbers are not terrible. Economy too strong for the kind of rate cuts that Wall Street is expecting, which I thought was really, really interesting. Also, another article I was reading today, they were saying, asking the question, can Powell and the Federal Reserve actually pull off this soft landing and avoid a recession? And you guys have heard me have my doubts about that since the word soft landing became a thing. These guys argue that unemployment and job growth are both starting to really crack now. Not only are there more people being laid off, the numbers are higher on layoffs every week, but even though there's job openings, hiring is down slow. So job growth slowing down, the unemployment rate ticking up. Both of these signs are big pointers to a recession coming up. So you can add those two on to all the other signs we've had about a recession coming up. So now the question is going to be, is that 1/4 point cut going to be enough to turn all of this around? Is a 1/4 point cut going to save the real estate business? I don't think so. Is it going to save commercial real estate? I don't think so. Is it going to change really shoppers' habits? People who are stuck using credit cards for necessaries, are they going to go back and just say, well, you know what, man, they cut rates a 1/4 point. Let me go spend whatever I want. Do they really think that's what's going to happen? So we'll see now the way it goes, because the Fed's going to kind of be handcuffed. They're not going to be wanting to cut rates into a strong economy because that's inflationary. And they're walking the tightrope now, right? Because they have their dual mandate, stable prices, maximum employment. So now they're walking the tightrope. Whoa. Got to be really careful, man. They're trying to do this is like trying to thread a frickin' needle. And I got to see if they can actually pull it off. I got to say, I got my doubts, guys. Another piece of data we got today was interesting. It said consumer sentiment, which is basically how consumers are feeling about the economy, fell to its lowest level in 8 months. So consumers very, very unhappy with the way the economy is going. Amazingly, this is from the University of Michigan, which we'll get their report on Friday, but this one they leaked out early. They said 3 in 5 people that the University of Michigan surveyed believe we are in recession right now. And that goes to yesterday's show where I was talking about almost 60% of the 2,000 people they surveyed believe we're in a recession right now. So what a weird thing we got, isn't it, guys? We have an economy that's going pretty decent, a stock market breaking records, housing prices, real estate, people that own houses, man, their equity just continues to go up and up and up and up. You would think that these would be things that, hiring has been robust, corporate profits have been pretty good. We haven't really seen any major crack ups. We're seeing some companies having difficulty, Red Lobster and Macy's and a few others. But, things, if the mood wasn't so sour, people might look at this economy and think, well, but what's the deal is the accumulated inflation from 21 to today, more than 20%. And that is just, people can't get past it because they see it every day. You stop for a sandwich, you go to lunch from work, you see it. You go to the supermarket to pick up the milk for your wife on the way home, you see it. Take the kids to daycare. Everywhere you go throughout the course of your day, you see inflation, you see higher prices. It's quite a conundrum here. It's going to be interesting to see how they can make the mentality of people see things differently than they do with their own wallet, which is always going to be the number one believer. Who are you going to believe? Me or your own lying eyes, right? So it's going to be interesting stuff, guys. I'm telling you. Now, what do you guys think? You think that mission accomplished? The Fed's good? The Fed's going to, start cutting rates, hoi polloi, and everything's going to be great? You guys believe that? You believe mission accomplished? We're not going to have any more spikes in inflation. It's just going to continue right down to target and stay there. Real estate, not tough in Florida. I'm not surprised, man. Florida's tough with the insurance costs going crazy down there. You got house insurance coming in at $300, $400, $500 a month. Going to be tough, man, because with interest rates high, the mortgage part of the house is high, right? The principal and interest part of the payment. Now you add on a giant chunk for their homeowners insurance, right? So let's just say you're buying a $450,000 house, basic minimum down payment, principal and interest well over $2,500. Now you add on $400 or $500 a month for homeowners insurance. Now you add on property taxes. If you have mortgage insurance, you add that on. Now you're looking at a payment closing in on between $3,500 and $4,000 to buy a starter house in Florida. Kind of the same thing we're having in Vegas. Now we're not having the difficulty with the homeowners. Homeowners is going up here because we all get to share the burden, but nothing like it has in Florida. We're not getting hit with tornadoes or hurricanes or big weather deals. We're not burning down like California and the West Coast is. But real estate in a very, very tough spot, man. Very tough spot. And I don't really think these minor rate cuts they're going to do are going to save the day. Anyway, man, I'm already up to 19 minutes, guys. I want to do tomorrow I'm going to come back and I'm going to do this piece on this data breach that I was talking about yesterday. This is a big deal, guys. 2.9 billion pieces of personal information were hacked and stolen. Basically, they've admitted they got everybody's name, social security number, and all kinds of data that they can use to hack into your existing accounts, to create new accounts for you, to do all kinds of mayhem. And they're making all of this information readily available to hackers and crooks on the dark web, guys. So I want to talk a little bit more about this. I'm going to save it for tomorrow so I don't go on for 28 minutes here today. But know that tomorrow we're going to talk about this, and we're going to talk about some of the things you guys can do to protect yourselves. Because know this, the dogs, know this, they do have all of your personal information. It's just the truth. The company that was hacked is National Public Data. These guys are the company that everyone goes to for background checks. So they know everything. That's the company that was hacked, and they got information, everybody's information. Anyway, guys, that's it for the day. I'm over 20 minutes. Can't help it. I babble. I appreciate the support. You guys rock and roll. Enjoy your evening, guys. Tomorrow's going to be a big one. We'll get unemployment and we'll start to get a whole bunch of data tomorrow. I'll be back to bring you the news you need. Please hit the thumbs up, guys. It helps us out. Until tomorrow, everybody, take care. Thanks.